Good afternoon, this is Dan Howe at PTI Securities and Futures coming to you for your daily afternoon wrap-up for Thursday, December 29th. Overnight, relatively narrow overnight range, not much going on. The European still the most important news. The Italian bond auction was a 3-year up to a 10-year. The 10-year note actually came in a little bit better than expected. Let's put it this way, it could have been a lot worse. It came in at 6.98. People were hoping that it was going to be better than that, but they were really afraid it might be worse. Realistically, though, it didn't really do much of an impact. The Italian 10-year note during the course of the day traded back above the 7% level and actually closed at 7.02. So realistically, even though it could have been worse, it didn't have much of an impact on the Italian 10-year note. You have to think that maybe, just maybe, that the ECB was actually looking for a little bit better reaction because they opened up the liquidity floodgate a couple of weeks ago when they let $500 billion out to the banks, and so far the banks are the only thing that they've been actually able to do is buy short-term sovereign debt and put it back to the ECB, because the ECB is having a huge amount of cash on deposit from their banks. They're finding no other place to loan it, certainly afraid to loan it to each other as well as loaning it to anybody else. So the ECB has to be a little bit disappointed, you would think. However, yesterday was a total risk-off day. Today was a risk-on day, but for stocks only. The S&P got back pretty much everything. It went back up to 1256, up 12. The Dow closed up 135 to 12287. NASDAQ up 23 to 2613. The 10-year note, however, didn't follow suit. So the bonds yesterday actually, were very bid, and the yield took a big hit. Well, the yield actually closed down one tick today, so it closed at 1.89. So if this was truly a risk-on day, the bonds would have sold off. It didn't. Same thing with the dollar. It was not a risk-on day in terms of the dollar. The dollar closed at 83.69, did not reverse any of yesterday's. So it appears that the majority of today really wasn't a risk-on day. It was just window dressing. Volume was incredibly small. So it really looked like the people who wanted the market to appear better at the end of the year were able to push it around however they wanted to. Gold continued taking on the chin. It was down another $18 to 1547. So this has broken through a lot of technical resistance. The only thing that we can say about the precious metals is that silver did actually get back into the plus column at the end of the day. Tomorrow, I can't imagine us having less volume than today, but it's probably going to happen. Next week we have a very, very big calendar, pretty much everything coming out on the fundamental side, capped by the payrolls on Friday. You have to assume, though, that when all the people in the central banks, all the trading desks in Europe come back, that the central banks' movements of the last couple of weeks should have gotten more of a bang than what they actually got, because the fact that all the balances at the ECB, the Italian 10-year note still above 7, this is not the reaction the ECB wanted when they actually put out this massive liquidity a couple of weeks ago. They put it through a fire hose and it just didn't seem to make any impact. So it'll be very interesting to see what happens next week. This is Dan Howe, PTI Securities and Futures.